Well, hello folks, this is T. Brian Hayes here from Hayes Advisor Group with your November 2015 Educational Economic Summary. In this video, we'll talk about some of the economic events that influenced markets last month and give you some insight into what they might mean for you as an investor. As always, please stay tuned at the end for required disclosure statement. November was another volatile month for markets. Investors weighed terrorism and concerns about global growth against some positive domestic data. Let's take a look at some of last month's events. Terrorist attacks in Paris, Beirut, and Mali rocked the world and brought home the threat posed by instability in the Middle East. Despite the ongoing security concerns, investors largely shrugged off the events, showing that they're able to keep calm and carry on in the face of uncertainty. It's unknown how these attacks will affect global economies, but some experts worry that travel restrictions and reduced retail spending will harm already fragile economies in Europe and abroad. Domestically, economic data is looking pretty decent. The October jobs report surprised, coming in well above expectations. The data shows that the labor markets continue to add jobs. Even better, wages grew substantially, 2.5% from a year ago, the highest year-over-year increase since 2009. We also got a look at second estimate of third quarter economic growth. The latest data shows that the economy grew 2.1% in the third quarter, which is a much better number than the 1.5% growth reported in October. The revisions show that businesses spent more aggressively than originally thought and indicate that the economy continues to grow briskly. These positive economic indicators are putting pressure on the Federal Reserve, and speculation is growing. Will the Fed raise interest rates in December? We won't know for certain until they pull the trigger. But what we do know so far suggests that the Fed is seriously considering a rate hike this year. We also know that the Fed economists are closely monitoring economic data and won't make a move until they feel confident that the economy can handle it. As we get closer to the end of the year, we can expect investors to turn their attention to holiday retail numbers and expectations for 2016. What we know so far suggests that the U.S. economy will continue to accelerate while many other countries will continue to struggle from weak growth. We'll talk more about fourth quarter results in the coming year in next month's video update. That's it for November 2015 Educational Economic Update. Now let's look at some of the specific market data for November. According to the Canterbury Portfolio Thermostat indicators, volatility continued to fall in November after spiking back in August. However, even with the dropping volatility numbers, we are still in a bearish transitional market state. If volatility continues to come down as some other factors and indicators turn positive, adjustments will be made as we move back into a bullish market environment. However, until this happens, we remain more conservative to protect the accounts in this higher risk environment. Several indicators are now still pointing to markets heading further down. So again, our main objective is to protect against that risk. A lot will be determined in the next few months, so we'll keep you posted on those details. Please continue to follow the weekly market updates every Monday that you get because this has some very important information in it, so always pay attention to that. As always, if you have any questions or concerns about what we've discussed, please give our office a call at the number below. Please remember that nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, please give us a call at 1-800-939-1603. We'd be happy to talk to you. Finally, let me wish you a very Merry Christmas and a very Happy New Year. I hope you have a very safe and happy Christmas season with family and friends. I look forward to seeing you soon.